You need to train your eyes for market structure with backtesting, and it will be easier after a while. In this video I will show you how you can identify valid higher highs, higher lows, and valid lower lows and lower highs. So you will be able to identify what the main trend is. If we are in an uptrend, the price will form higher highs. So this will be the higher high, higher low, higher high, so we can wait for another higher low. The first critical point will be the last higher high, because the last higher high is the first critical resistance zone. So if the price will turn from there, then most likely we will see a double top pattern. But if the price doesn't break the neckline, then we can get into a consolidation, which is a continuation pattern, so we have a higher chance for the trend continuation. So if we are in a consolidation, there are just lows and highs. So this is a low, this is a high, low, high, and so on. This is a new higher high. If the price breaks above the last higher high, then we have a new higher high. And it is very important that the price needs to break the last higher high with a full candle body, because if only the wicks breaks above the last higher high, then we have a double top, not a new higher high. We can see that we are in an uptrend, the price forms higher highs, so we only looking for buy opportunities. We can trade the pullbacks also, but we need to go down with the time frame. Let's say we trade on the 1 hour time frame, then we need to go down to the 5-minute chart to find a good risk to reward setup, and the take profit can be the Fibonacci 0.618. So if you want to trade the pullbacks, you need to go down 3 time frames lower, and then you can get a nice risk to reward setup. But I don't recommend to complicate things. I think the best is just to stay with 1 time frame and follow the main trend. So what we can see here, we can see a higher low. After that the price will create a new high, but it's not a higher high, so this is a double top until now, or maybe it will be a consolidation. If the price will break the neckline, then we can know for sure it's a double top. So if the price forms a higher high, then a higher low, then a high, that is a double top pattern. If the price forms a lower low after the double top, then most likely it will come back to the neckline, so you can have an entry on the neckline. But I don't really recommend it, because even if the price did break the last higher low with a lower low, it still doesn't mean that we are in a downtrend. It can break above the last higher high and we can stay in an uptrend. This is why I always wait for 2 lower lows. So here we can see a lower low, then a lower high, and if the price will create another lower low, then we can look for sell opportunities. So here we can see a lower low, then a lower high, then another lower low, and from here on we are in a downtrend. We can enter up here. The risk to reward ratio will be a bit better because the take profit will be bigger, but as I said, that price still can create a new higher high and continue the uptrend. So from here on we would like to see new lower highs and lower lows. The goal is to sell high in a downtrend and buy low in an uptrend, and this is very logical. So again, lower high, lower low, lower high, lower low, and let's say that the price is not going to form a double bottom, it just forms a higher high. If the price will break above the last lower high with a full candle body, then it creates a higher high. But even after that, if the price will come back here, I'm not looking for entry just yet. I would wait until the price creates another higher high. So we need 2 higher highs after a downtrend, and after that we are officially in an uptrend. So higher high, higher low, and then another higher high, and after that we can look for buy opportunities. But let's see how it works in the real market. So we are on the 1 hour time frame, and let's see what's going on here. So we can see that we are in a downtrend. We can see a lower low, lower high, lower low, lower high, lower low, and here we can see a small consolidation. So high, low, low. The legit lower high is always the highest point of the push, so this is the highest point of this lower high. We can see that the price did break the last lower low with a full candle body, so this is the new lower low. And I forgot to say that you need to have at least 2 candles to identify the pullbacks or pushes as legit higher lows and lower highs. So if we are in a downtrend, we need at least 2 up candles to identify that push as a lower high, and if we are in an uptrend, we need at least 2 down candles to identify that pullback as a legit higher low. So if we are in a downtrend, we need at least 2 up candles to identify that push as a lower high. Here we can see more than 2 up candles, so this is a legit lower high. Lower low, lower high, lower low, and here the price will change directions, what we can see. So the price did break through the last lower high with a full candle body. So here is the higher high, then a higher low, and then a new higher high. So from here on, we're only looking for buy opportunities. Here we can see a higher low, then a higher high, and here we see a big push to the downside. So this is a lower low, but we still don't look for sell opportunities. We need to wait for the next lower low. Here we can see a double top. Here is the neckline, and we get into a consolidation. The price did not break the neckline with a full candle body, so we are still in a consolidation. We can see that the price created a new higher high, but after that the price goes down again, and we can see a new lower low. Here is a double bottom pattern, then we can see a lower high, and we can see another lower low. So from here on we are in a downtrend, so we can look for sell opportunities. We can see a lower high, then the price created a low, then the price did go up very strongly. We can see a double top pattern and the neckline. This is not a lower low because it didn't break the last higher low, which is here, so we are still in an uptrend, and we can see another higher high, and as we can see the price goes down again. So this is a lower low, lower high, and a lower low, and we could go on and on with market structure. You need to train your eyes for market structure with backtesting, and it will be easier after a while. If we want to use the Fibonacci, we always need to draw the Fibonacci from the last lower low to the last lower high, or from the last higher high to the last higher low. So just for an example, here we can draw the Fibonacci from the last lower low to the last lower high. Here another lower low and another lower high. So we can draw it from the last lower low again to the last lower high, and we always draw the Fibonacci from wick to wick. So I hope you enjoyed this video. If you want to know what is the best supply and demand strategy, check out the next video.